Okay, the audit committee is now resuming an open session. I'd like to start by proposing a motion to adopt the minutes of the audit committee meeting held on July 12th, 2021. Can I have a second, please? Okay, thank you. And I'm going to poll each member. Jose Pagan,
Yes.
Dr. Katz,
He's on mute.
he's on mute. Frida Wang,
Yes.
Penioski Peñamora,
Yes.
Anita Kawatra. I don't think she's hearing me either. Anita? Dr. Katz? Yes,
Yes.
okay.
Benny's here.
And Anita will come back to, if you remind me, Felicia. During the executive session, the committee, oh, sorry, Penioski Peñamora.
Say yes.
Oh, yeah, I thought so.
Thank you.
You're messing me up there, Felicia, okay? Okay, all right. During the executive session, the committee reviewed and approved the FY 2022 corporate compliance work plan as presented. We now have a resolution to consider. Catherine Patsos, please read the resolution into the record and proceed with the presentation.
Sure. The resolution is adopting the New York City Health and Hospitals Corporation's, the system, revised principles of professional conduct, POPC, which sets forth the system's compliance expectations and commitment to comply with all applicable federal and state laws. The POPC serves as a system's code of conduct as required by 18 NYCRR Section 521.2C1 and as recommended by the U.S. Department of Justice Criminal Division's Evaluation of Corporate Compliance Programs updated June 2020. The revised POPC also updates the system's gift policy as detailed in Operating Procedure 50-3, Policy and Gift Exchange and Receipt.
Okay, are there any questions, please? Okay,
Do the presentation?
The presentation.
oh, go ahead.
Okay, so just briefly, the POPC sets forth our compliance expectations and commitment to comply with federal and state laws. It describes our standards of professional conduct and serves as our formal code of conduct for our workforce members and business partners. It's also required by New York State Social Services law and regulation. Next slide. So I'm going to review just some of the substantive changes to the POPC. And you should have in your packets a version of the POPC with the comments that identify these changes. First, we added language in the overview that this is required by the social services law to have policies and procedures that describe our compliance expectations in a code of conduct. And the Office of Federal Inspector General's compliance program guidance for hospitals also discusses the need for standards of conduct for healthcare facilities. And CMS requires Medicare managed care plans and their participants to have a code of conduct. That was added to the POPC. Also, in the core objectives, we added the italicized language. POPC serves as a system standard of professional conduct. Next slide. Also in the core objectives, in subsection B, we changed what were the guiding principles to iCare model in order to be in line with our current system of values. So, and that here is also the former principal section that we are replacing. And next slide. Also in the core objectives, we added language from Metro Plus's updated employee handbook in subsection O. And that has to do with their mission to provide a caring, high-quality customer experience to preserve and improve the health and lives of New Yorkers with its integrated healthcare system. And there also is the prior language regarding Metro Plus. So this was updated per Metro Plus's input. Next slide. In the responsibilities of workforce members, we added these 4 responsibilities that were previously in a FAQ, which we no longer need because everything from the FAQ is basically in the POPC. So we just added these additional requirements of responsibilities that were not in the POPC previously. The next slide. For examples of unprofessional conduct, we added new language regarding conflicts of interest. And this is, we go into a little more detail about what is under the conflict of interest law. And previously, the conflict of interest had it included as unprofessional conduct, accepting gifts or services from a patient, vendor, or potential vendor. As I mentioned previously, we are updating the POPC to revise that accepting gifts from a patient language. So that is part of the next slide section.
Okay.
So under this new subsection K, we under examples of unprofessional conduct, we added failing to comply with the system's gift policies, including these 4 specified gift policy requirements. And the prior policy prohibited gifts, accepting any gifts or services from a patient, vendor, or potential vendor. So we revised this so that it is possible for to accept non-monetary gifts of limited value from a patient or a patient's family member. The next slide. Also in unprofessional conduct, we added a new subsection N that expands the language regarding Hipaa compliance. So there's there's now 7 specific issues of unprofessional conduct regarding Hipaa compliance, and the prior language, as you see there, only was very limited and in general. We made it more specific to ensure that these things are not violated. And the next slide, we added to how to report issues of violations, language regarding how to contact MetroPlus, Medicare, and Medicare plan sponsors for violations, in addition to how to contact the Office of Corporate Compliance. These are also in our operating procedure 50-1, the Corporate Compliance and Ethics Program. The next slide. Now there's just a few technical changes. We changed the section headings in the table of contents to make them, to phrase them as statements rather than questions. We reformatted the sections to enumerated and lettered numbered format instead of just bullets. Updated our phone number and address, and in the stay informed section, we deleted language that related to issues that are not currently handled by the Office of Corporate Compliance, such as workplace safety and environmental care issues and discrimination and sexual harassment issues.
Okay, are
So-
there any questions or comments? If there are none, may I have a motion for
Sorry,
adoption?
Ally, could I ask a quick question?
Yeah.
Sure.
Catherine, thank you. This summary was really helpful, the way you put it together. It was really easy to follow. Thank you. The one question I have is that the code of conduct covers our business partners as well as all of the staff and members of the
Right.
how does that occur? I mean, when we engage with them in a contract or something, do we ask them to, verify that they would follow our code of conduct, or how does
That, yeah, that's incorporated into the contracts.
okay,
And that's always been a part of the POPC. That's not new to this POPC.
right? And so we incorporate our code of conduct, ask that and then do we monitor that, or is there some mechanism where we're ensuring that they are following or in line with our code of conduct?
That's something that's just a very good question, and it's not something that we have been able to do. But if there is something that were to come to our attention that where they were not in compliance with our their code of conduct, then we would have to take action in that regard and find out, to determine and have them mitigate the issues where they may not be in compliance.
Okay.
All right, thank you, Frida. I'm gonna
And this,
poll,
this will be presented as a resolution to the board as well.
okay, so I'm gonna poll each member for their votes. Jose Pagan,
Yes.
Dr. Katz,
Yes.
Frida Wang,
Yes.
Danielski Peñamora. and
Yes.
Anita Cuatra. Okay, the resolution's approved. The next, of course, I vote in favor of all these resolutions. The next item on the agenda will be the presentation of the 2021 Grant Thornton, June 30th, 2021 management letter by Tammy Rudinsky.
So
Yes,
we'll go over the financial statements first.
yeah, it's not here, but that makes sense. We'll start with the financial statements, yes.
Okay. Thank you. Good morning. Jay Wyman, Corporate Controller. Today we're going over the financial statements for June 30th, 2021. It's another year of COVID reporting under our belt. A lot of expenses and revenues to report, which we'll go over. The focus is going to be on the HHC or the H&H business type activities, which on the financial statement is page 17 and 18. Committee members have a separate one pager, which we'll review. James Linhart will review the highlights, and then Grant Thornton will review their comments and the required communications. We do expect a unmodified opinion, which is basically saying that we have fairly presented the financial statements. That's good. That's what we would expect. And we may have some small edits on the notes to the financial statements after this committee meeting, which will not impact the numbers. We don't expect to. If anything significantly changes, we'll bring it back to the committee. But that would be not expected. So I'm going to turn this over to James Linhart, Deputy Corporate Controller, just to go over the highlights.
Good morning, everybody. I'm just referring to this one pager that everybody should have in front of them. The overall, the corporation's net deficit position improved by $79.3 million from last year. As you can see, revenue increased 1.836 billion. So the reported amount was 10.9 billion versus 9.1 billion previous year. And revenue briefs are the net patient service revenue increased by $1.1 billion, mainly due to the increases in DISH and UPL. DISH is disproportionate share payments and UPL is upper payment limits. Revenues of 170.3 million plus 530 million of test and trace outpatient program revenues and other COVID patient revenues, and $350 million of other non-COVID CMI increases. Appropriations decreased by 92 million due to an increase in the amounts paid to the city for debt service, requirements balanced against the cash received from the city. Grant revenue increased by 803 million, primarily due to the test and trace program revenue and FEMA grant revenue offsets by decreases in CARES Act funding when compared to the prior years. And then other revenue continues to increase. This year was 55.6 million. Last year was an approximate amount, the same amount, and it was largely due to the 340B program revenue, pharmaceutical revenue. So that's been working out very well for us. Look at the operating expenses. We had $10.7 billion of operating expenses in 2021 versus $9 billion worth of operating expenses in 2020, for an increase of roughly 1.702 billion. Personal services or salaries increased 246.9 million due to a slight increase in FTEs for health and hospitals plus the T2 initiative over prior year's levels, in addition to increased use of overtime and collective bargaining increases. Other than personal services, or what we call OTPS, increased 1.6 billion, primarily due to the pandemic expenditures over the previous year. Pension decreased 419 million, which was resulting from an increase in investment income over the course of fiscal year Pension is calculated by the Office of the New York City Office of the Actuary. And the same thing with the line below that, which is the post-employment benefits, or what we call OPEB, which is post-employment benefits other than pension, decreased $13.5 million due to changes in the actuarial calculations as promulgated by the New York City Office of the Actuary. Affiliation contracted services increased $88.7 million, or 7%, and that was related to contractual increases and COLA settlements. And depreciation increased $87.6 million, due mainly to continued spending for EPIC, EITS, and other related COVID purchases during the course of the year. The other changes in net position increased $14.1 million. Capital contributions funded by the city decreased $47.3 million. There was more projects that were funded by New York City bonds, CARES and state CRFP funding when compared to prior year. And capital contributions funded by grants and donors increased $33.2 million due to FEMA mitigation and CRFP spending. All that, which is summarized, is contained in the MD&A analysis, which is the financial statement package, which is on pages 3 to 14. So if you want to go through more detail, feel free to read through them. I want to go over some ratios here. Our current ratio, which is the ability to pay liabilities, was 0.98. Last year was same, 0.98. So that's good. If you look at the 2019 statewide average and New York City average, those are taken from the Greater New York from the 2019 accumulation of force reports that was provided to Greater New York. Statewide average is 1.59. New York City average is 1.62. You want to be as close to 1 as possible. We are. Days cash on hand was 27.12. Last year, it was 28.22. Statewide average is 58. New York City average is 59. Net days and patient revenue, net days revenue and patient receivables was 60.26 this year. Last year was 78.69. It just shows you that we're collecting monies quicker, and we're doing better than average for the statewide average and New York City average. And as you can see on this page, there's the balance sheet and the income statement. What I presented to you in summary was just the income statement, and that's my portion of the presentation.
Does anybody have any questions?
Any questions? I'm shocked. Okay.
Okay. Should we move on? Okay,
Yeah.
well, thank you,
Oh,
James and Jay.
Yeah, I'm waiting for Frida.
Yeah, waiting for Frida.
She's like, gave you a thumbs
I
up.
just gave you a thumbs up, no questions. Thank you.
Great.
That's great.
Thank you, Frida.
Okay, well, thank you, James and Jay and John and Dr. Katz and Nicole and the entire team. I know some people are participating virtually, but really want to start out the presentation on required communications. I'm Tammy Rudinsky. I'm the partner. I've served on the partner of New York City Health and Hospitals for the past couple of years from Grant Thornton. And on the call with me today, virtually, is Lou Fierstein, a secondary partner, and Dana Wilson, who leads the insurance part of the audit, and then Steve Diaguardi, our senior manager, who's also been on the account since Grant Thornton took over a couple of years ago. Obviously, this was a unique year, our second year working fully remotely, but I think, the fact that we're here today, meeting deadlines on time, is a testimony to really the finance department, led by the members of management that I just mentioned here. Really thank you for the full cooperation throughout this audit process. So hopefully you've had time to read the packet in front of you. We'll highlight some of the key pages today. We won't go through everything in detail, but in front of you on slide 1, the deliverables. Jay just took you through what we'll plan on issuing in the next several days is the New York City Health and Hospitals June 30th, 2021 financial statement audit. There's also a couple of other deliverables mentioned here, such as the HHC accountable care and the health plans as of June 30th, and then some December 31st year ends, as well as a whole slew of cost reports for the June 30th, 2021, which comes later on during the fiscal year. This lists the responsibilities as part of our Grant Thornton team to perform an audit under GAS, and what we'll mention later on. is we plan on issuing an opinion, a clean opinion, a modified opinion, as Jay alluded to earlier. We're also required to report any fraud that we're aware of or any material non-compliance, and we'll talk a little bit later as it relates to our report and our findings over significant deficiencies for the current year. This slide lists out both our management's responsibilities and those charged with governance, the audit committee today. And, just to highlight a couple of those under those charged with governance are responsible for setting a positive tone at the top, discussing any significant accounting or internal control matters, as well as informing us of any significant items that are relevant to our financial statement audit. And as I mentioned before, management's responsible for preparing the financial statements that you see in front of you today, designing and implementing internal controls, and communicating any significant accounting or internal control matters to us, and providing us with unrestricted access as they have throughout the entire audit process. At this point, I'll just pause for a moment from the committee's perspective if anyone's aware of any fraud that we should be aware of as part of our audit process.
No, anyone aware of any fraud? Thank you, Tammy. No.
Perfect, thank you. So this slide highlights some of the accounting considerations, and when Steve goes through some of our audit areas of focus for this year, you'll see that we spent a lot of time in the grants area as it relates to the various funding, the CARES Act, PRF funding. But these are some of the other various accounting considerations as you think through some of the risks associated with COVID-19, such as, as I just mentioned, any federal relief programs which you do participate in, disclosures, risks, and uncertainties. You'll see some added disclosures in the financial statements. Any reserves for uncollectibles from the funding you may have received or any other significant donations, insurance recoveries, contingent losses, any asset impairments, and then going concern evaluations. So those are some of the key areas that we evaluated, spent a little bit more time during the fiscal 2021 audit process as it relates to the risk faced as of the COVID-19 epidemic. This list just talks about some of the fraud risks that I mentioned earlier. Just what I like to say on this slide is part of our audit process is we interview or have discussions with various levels of management throughout the organization, about 10 to 12 different people, as well as the audit committee chair, internal audit, compliance, legal, as well as management from the finance, just to get their sense if they're aware of any fraud and any risks that they see that we should incorporate as part of our audit process. So those are some of the procedures that we do as it relates to fraud, and there are some other procedures listed on later in the presentation. This slide, we put this together in advance of this meeting as of October 6th. So this just lists out some of the audit areas that are open. Most of these have been closed down. We're just working on, finishing up, a couple of these audit areas. So for example, journal entries and census data, we've already completed the testing, but this was a slide that was prepared when we prepared this required communications. So I'm just going to turn it over to Steve to walk us through very high level some of the significant areas of risk that we focused on as part of our audit.
Great, thank you, Tammy. So the first area I want to focus on is the accounts receivable and patient service revenue. It's one of the largest line items within the financial statements of the organization. And we spend a lot of our time here, really because there's a lot of judgment and estimation that goes into the patient accounts receivable and revenue as it relates to allowances that are placed on these accounts. As a result of the various different payers that ultimately are paying for the services that are provided to patients. In looking at the receivables, the revenues, and the related allowances, we focus heavily on, again, that estimation process and the assumptions that management is using to determine those estimates. We test the underlying data that management ultimately utilizes, and to get comfort over the ending balances. Some of the key procedures that we perform include what we call a revenue proof to cash. So we'll take the revenue, convert it to essentially a cash basis, and we'll look at all the cash that came in during the year and validate that the cash that came in during the year ultimately supports the revenue balance that is being reported. In addition, we test the underlying data of those cash receipts. Also, we take a look at management's historic collection activities. How has management historically collected on the receivables and how is that looking currently? Is that on track with what we've seen in the past? Are they collecting more or less? And how is that in turn factored into the estimate of the ending balances? Based on our procedures that we performed, and as Jay mentioned earlier, and James mentioned earlier, the organization is collecting quicker than the past year, which is a very healthy sign that the receivables are accurate and fairly stated, and we've come to that conclusion. Moving on to the next slide. Another area we focus heavily on is the estimated settlements with third parties. This area is another area that relies on a lot of judgment and management estimate. The third-party payer settlements are related mostly to cost report, outstanding and open cost report settlements with Medicare and Medicaid services. And these are long-term type settlements that take quite a long time to really get settled and ultimately converted to either a amount due back to the organization or amount that the organization has to pay back to Medicare or Medicaid. In doing so, again, we look at the estimates, the assumptions that management is using, and here's an area where we really use our experience within the industry to understand what's really happening out there. What are we seeing occurring that will lead us down to a conclusion that management's estimates are accurate or as accurate as they can be given the information that's available at the time. Based on what we're seeing and what we tested within third-party payer settlements, we are comfortable that management has fairly stated these estimated balances and that the balances are utilizing the most up-to-date information at this time. Moving on a little to the next slide, just want to cover some of these other areas. Capital assets, construction in progress. These are some things that we do typically each year. It's our normal audit areas. Nothing really, I think, of importance to note here. However, we do take a look at the assets and really focus on if there's any impairment of those assets. Anytime we're in any kind of situation where there's a distress within the economy, you just have to start questioning about long-term viability of the assets on the books. In our case, we did not encounter any or note any indicators of impairment within the assets, and the capital assets are in our clearly stated. Moving on to long-term debt real quick. So long-term debt, one of the key areas that we focus on is the debt compliance with the debt covenants. So utilizing the organization's financial results at the end of the period, we take a look at the debt covenants that are within the agreements and ensuring that the organization is in compliance, which we have included on. Some of the other areas here, we'll just go over real quick. These are on the liability side, accrued liabilities, amounts due to vendors. Our concern here is about completeness. Are there any liabilities out there that have not been recorded? And the procedures that we perform, looking at activity that occurred after June 30th, we look at significant transactions that have occurred to make sure that those transactions, those expenses, are recorded in the appropriate period. And if they are related to the fiscal year 21, that there's the appropriate accruals on the financial statements. Again, we have concluded that the accrued liabilities are fairly stated. And then lastly, on this slide, post-employment benefit, that's pension and OPEB expenses. We'll talk about both of those together. So we have a separate valuation actuary team at Grant Thornton that takes a look at the actuarial valuations for both the OPEB and the pension liability. Again, really focusing on those estimates that are being used and underlying assumptions, including discount rates, long-term rate of return, and some of the other assumptions that we see. And again, we take our experience within the industry, ensuring that those assumptions are reasonable, and we have concluded that those balances are fairly stated. Grant revenue. So we spent a significant amount of time on grant revenue. As you would imagine, there was a lot of grant activity this year and last year with CARES funding, FEMA funding, and test and trace. In fiscal year 20, that's when a lot of the grant revenue related to CARES ended up on hitting the revenue. In the current year, the larger pieces were the FEMA funding that was received, as well as test and trace. And what our focus is to really make sure that the funding that was received is spent in accordance with essentially the grant agreements and what the organization is required to spend on. So we did very detailed testing of all three of those pieces of grant funding that we received, CARES, FEMA, and test and trace, to ensure that the underlying expenditures were allowable under the grant, and that the funds were spent in accordance with the grant agreements, and that the organization is performing their proper fiduciary responsibilities of those grants. Just real briefly here, looking at financial statement disclosures, as part of our review of the financial statements, we look at all the financial statements and we look at all the disclosures, and we go through a checklist ensuring that all required disclosures are included within the financial statements. Essentially, we're looking for completeness, making sure that the financial statements are not omitting any required disclosures. We perform procedures around subsequent events, ensuring any events that have occurred after June 30th if they are required to be reported within the financial statements, that they are, and if there's any events that need to be raised to the attention of the committee. We did not encounter anything that's not already reported within the financial statements. And then we can move on to slide 15 here. So slide 15, I just want to touch on procedures that are performed around Metro Plus. Our grant Thornton team includes Dana Wilson, who's on the phone. Dana and his team are part of Grant Thornton's insurance industry audit practice, and Dana heads up that practice. So we have a separate team that performs these procedures, and they really focus heavily on the claims payable reserves, IBNR. Again, this is a high estimation uncertainty type area, so the focus is on those assumptions that are being used to develop those estimates. They test completeness and accuracy of the claims that are provided by Buck, who is the actuary for the organization, and also looking at the assumptions that Buck is using in determining their actuarial valuation, testing any underlying data that's going into those assumptions. Again, no, we did not have any exceptions to report based on that testing.
Any questions? If not, I'm going to move on. Okay, so as part of our audit, oh, sorry, yes.
Hi, thank you very much. So on these two questions are a little bit related. It's sort of on the timing of, you talked about, Stephen, the cash and revenue proof, sort of, I don't follow exactly how you do that, but it's basically seeing when the revenues are recognized and when they're received. Is that correct?
Yes, and it's also looking at the cash that's received during the year. So, the organization's financial statements are on an accrual basis, right? So there will be amounts that are recorded on the financial statements that are receivables, right? They are revenue that was earned during the period, but not received until a future period. So these are amounts that are, again, revenue earned during fiscal 21, but not earned until afterwards.
Right.
What we look at is the revenue that was earned during fiscal 21 and received during 21. And that's what this revenue proof is doing, is looking at the cash that came in to support that. We then perform additional procedures around the receivable balances, those accrual balances. And that relies, a lot more on historical cash collections and a management developing an estimate to determine the this estimated receivable amount, what they expect to receive.
Right.
So for example, sorry, do you want to say something?
Yeah, I'd like to add to that. At the end of every audit, or during the next year's audit, one of the processes is looking to, retrospectively, how well did we do in the estimate for the accounts receivable, which is based on cash, right? We
Right.
expect, 700 million. Did we actually collect the 700 million? That validates the methodology that we use in the current year. So it's very important for us to be able to demonstrate that as part of the audit, that our last year's AR balances were good, right? And that's based on cash, right? So, cash and accrual are essentially the same, except for maybe the timing. So we accrue for it up front, the timing is the cash, and we subsequently get that, able to demonstrate that to the auditors, and they were able to place reliance on our method.
Okay. And Jay, I think this came up in one of our other conversations, but just the timing of those are sometimes quite mismatched, right? We might have quote earned it in fiscal 20, but we may not see the revenue until or the cash, excuse me, until 22 or something like that. Is that
Right, and yeah, on some of the balance sheet lines, it's like that. AR is more like 180 days. We'll collect most of the cash, so it's a lot easier to project and see the results of your estimate. On
Mhm.
something like Dish and UPL, could be years.
And is that treated differently than on the financial statements, the Dish and UPL accruals? Those don't show up as accounts payable, I presume. That's or do they?
They're showing up as retro receivables. So it's
Right.
third-party receivables, they'll show up in there.
Okay, it's a different sort of line item.
Yeah. Yeah, it's
But
just
the
not in the
procedures that the
AR.
auditor does are the same,
Similar.
okay? And then just, this is a little more technical, but in terms of, for example, a FEMA receivable, we may have submitted a request for a certain amount, but it has not, we don't necessarily know how much they'll approve right away. So what do we accrue when? Is it, once we know they've been approved, the expenditures have been approved, and then we recognize the revenue, or?
Yeah, once they're approved and obligated, and we know that those monies are due us, then we'll accrue it. In this financial statement, we had 532 million, even though the submissions are higher, right? But we can't accrue that until it's actually been approved and
Right,
ready to
got it.
go.
And then one of the things, Steve, you also talked about was spending some time looking at have the guidelines around these different grant dollars been satisfied or met, and that is that most of these are reimbursables for expenditures we have already spent. So is that process relatively straightforward?
Yeah, I would say just to jump in here, we would select a certain expense from a detail listing, make a sample selection, and then we'd ask for the underlying support. What was those dollars used for, and does that expense meet the definition that's allowed per the grant?
Right. Okay. And then the one other question that didn't come up, and it's not a huge dollar amount, but in terms of philanthropic dollars, does that show up in our grant line items? Or Jay?
Like a contribution receivable? Is that?
Yeah, so if we had a receivable, but I don't think we have any receivables, but on the income statement,
Yeah.
it is in the other revenues, so
Other
we do have grant
Other
revenues.
revenues.
Yeah, separate from grants.
Okay.
Right.
All right.
So you make sure, for example, if
And
you
you know how much
receive
it was,
like
right?
a donor,
past year?
gives a certain donation or contribution, we test that to make sure that, you have a signed donor agreement and all those requirements are met before recognizing that.
Okay. And did we have restricted dollars? Do those show up on the balance sheet differently as restricted? Or
Yeah,
Yeah.
they are restricted dollars. We have some, I don't remember offhand how much there was, but it's reported as on the balance sheet. It is
Okay.
restricted. Yeah.
Okay.
Okay.
Thank you.
Thank you for that.
Good questions. Okay. So just
Um,
a couple more minutes here. As you can imagine, we have a separate technology team which focuses on healthcare, and what they do as part of the audit process is they look at systems that are financially relevant for financial reporting. So, for example, I looked at your PeopleSoft system, your Epic system, your Sorian system, and they really do from a high-level perspective what they call as a design review. So they're looking at access management and change management. So from an access management point of view, they'll look at provisioning, deprovisioning, privileged user access. And then from a change management, they'll look at, who had the ability to make changes in the system and did they follow an appropriate process? As well as they looked at certain SOC reports, control reports per Cerner as it relates to your Sorian system. And as part of this process, no significant deficiencies or material weaknesses identified. Usually we'll come back in the December meeting and add some value-added comments as it relates to the information technology function. The other thing they do is do a high-level cybersecurity evaluation. So just really more of understanding policies and procedures, not a full-blown detailed cybersecurity test, but just looking at certain aspects as it relates to your program in general. Okay, so this slide just highlights our required communications as it relates to, as I mentioned, the unmodified opinion, as well as the engagement letter, which we shared to you earlier in the process. No significant accounting, alternative accounting treatments. During 2021, the hospital did not adopt any new accounting pronouncements other than GASB 89, which is the accounting for interest costs incurred before the end of the construction period as of January 2021. So nothing too significant there. The financial statements, as Steve mentioned, on the bottom of this slide discloses any significant risks and uncertainties as it relates to estimates, which we spent some time talking about. The main item that I want to talk about here is our requirement as auditors to report any significant deficiencies or material weaknesses. So we don't opine on internal controls as it relates to this financial statement audit, but what we do is if we identify any control findings of significance. So there's 3 different categories. There's a plain control finding, and then there's a significant deficiency, which is the middle level, and then a material weakness, which is the most severe type of internal control finding. In this audit, we identified 2 significant deficiencies related to the areas. The first one was grant revenue, and the second was inventory. So as required communications, we need to report to the audit committee. Here today, these particular control findings are significant deficiencies that we identified. So the first one relates to the grant revenue, and as you can see here on slide 20, our finding here relates to the supporting documentation was not maintained in sufficient detail by funding source. So we talked a little bit about earlier today the types of different fundings, your FEMA, the types of PRF funding, your CARES Act that you received as part of the COVID-19. And there was a delay in us receiving the auditable information or documentation to support the revenue. So what we recommend is that on a periodic basis, so going forward, management maintained by funding source, that's the key element here, a listing on a monthly basis that includes the appropriate documentation so that it's not being compiled, at one point in time at the end of the year, but it's periodic throughout the year by funding source. The second finding relates to inventory, that there was inventory purchases and usages throughout the year that were not accounted for on a timely basis. And as a result, management identified an adjustment at year end. So this was not an adjustment that the audit team, Grant Thornton, identified, but management, the finance department at the end of the year identified an adjustment. So what we recommend here is that there's additional controls and communication from the supply chain department that needs to be implemented to ensure that the inventory purchases and usages and the activities recorded on a monthly basis. So again, a timing thing so that throughout the year, this is kept up to date and that there's not an adjustment that needs to be identified at year end. Any questions? Okay, let's move on. We're almost there. No audit findings were identified, and we're not aware of any material uncertainties. As I mentioned here, I think is really important, as I started off to repeat again, no significant issues identified throughout the audit process. In fact, there's full collaboration and communication with the finance team. And just the last slide that I just like to point out here is, I did have a slide that did not get put in here in terms of some of our healthcare literature, white papers that we do issue as part of Grant Thornton, which I'm happy if none of you, if you don't subscribe to it, put you on the mailing listing. But this is just really lists our firm commitment to diversity. I think it's something that a lot of boards and audit committees have been asking about. It relates to, as part of our mission at Grant Thornton, we've established various resource groups that you can see. We call them our BRGs on the right. Which really aligns to the culture and our commitment to diversity. So I know that this is of interest to many members of various healthcare non-for-profit audit committees that I personally serve as the partner on. So I just thought I would include this slide here because it might be of interest to certain of you of what we're doing as part of Grant Thornton as a firm for our diversity and inclusion and our commitment. So I'll pause here. Any questions as it relates to the presentation?
I guess that management can just report back to the audit committee on the deficiencies relating to the grant revenue recognition and to the inventory. so we
Yeah.
can see what processes you put in place on those.
Yeah, no, I appreciate that, Sally. And I also wanted to say, I want to thank the Grant Thornton team. And, it's never easy, right, to audit health and hospitals, even on a good day. And with COVID, you just have to look at the numbers and see the volatility. And they've done a remarkable job. They're very professional and patient with us. And I'd also like to thank my own team for that. But on the two findings, we accept those, right? We welcome them. Our process, Sally, we'll get a little bit better understanding of those two issues. We'll come back with a corrective action plan. And if you'd like, we could present that, to the audit committee in terms of how we're doing. But we do take these very seriously, and we feel a responsibility, to fix them.
Thank you, John. Are there any other questions, please? Thank you, Tammy, and thank your team for an enormous amount of work, for terrific presentations, for patience in answering all of our questions. And hearing no other questions, I'd like to move for the acceptance of the financial statements. Dr. Pagan,
Yes.
Matt Ziegler will
Yes.
now be representing Dr. Katz. So you voted yes. Frida Wang,
Yes.
Seniorsky Peñamora,
Yes.
Anita Kawatra. She's not on anymore. Okay. And I apologize for running late, but such an important agenda items we have today. Next year, I'll know better. I'll add half an hour. But for now, we're going to have a compliance update from Catherine Katsas.
I'll be as brief as I can, so we stay on time. First, on the internal audits report, on page 3 is it shows what the New York City Controller's Office is doing with the controls over nursing homes, and they're making visits to the skilled nursing facilities, and then it says what they're looking at there. And then the oversight of auxiliaries by the same is Dr. Cass received a letter from the New York City Controller's Office about the progress on their recommendations, and that's being worked on, and it's due November 15th. The next page, internal audit activities. We are working on the dissolution proceedings of 2 of the auxiliaries. And number 2 there is that we have received final reports from our Bonadeo group, our CPA firm that we've engaged to look at the auxiliaries. And there are just a few that are still outstanding, and those are identified on page 5. Moving on to the Office of Corporate Compliance report. On page 2, there were no excluded individuals or entities on our exclusion list or identified on the death master file or National Plan of Provider Enumeration System. Moving on to page 3, we had 36 incidents that were reported in our tracking system. There were 9 that were violations, and 8 of those were determined to be breaches, and there's a summary of what those breaches are in paragraph 9. We received 4 letters from the Office for Civil Rights between June 24th and September 30th. One regarding Metropolitan about a charge nurse who posted patient information on Facebook. They determined to resolve this through the provision of technical assistance, which they provided to us with the letter. 2 letters regarding Elmhurst had received in August, both of them regarding a nurse from Elmhurst that had posted information on social media. Again, they decided to resolve this through technical assistance. And then on September 29th, we received a data request regarding an incident that occurred with a former vendor of the system. We responded to that request. Compliance reports, we received 86 reports, none of them were red, 33 yellow, 54 green. And then if you move on to page 8, principles of professional conduct, we discussed that already. And as mentioned in that discussion, we have finalized our OP 50-3 policy on gift exchange and receipt. The OP 250-22 HIPAA security policy on biomedical device onboarding procedure was signed by Dr. Katz. So that has been completed. Quick update on ACO. They received an unembargoed report from CMS that showed for performance year 2020 that they received payment of $11,415,299. It's their 8th year consecutive year of shared savings. The risk assessment we have reviewed and approved. Finally, the Hippo risk analysis and security assessment. As you know, we have engaged Coal Fire Systems Inc. to conduct our annual Hippo enterprise-wide risk analyses and security assessments. They are currently drafting reports and workbooks for the neighborhood and school-based health centers. This is their final phase of review for this year, and also for the end of their contract. And because their contract is coming to an end, we have issued an RFP for a new vendor to conduct the same analysis for the next set of 3-year periods. That concludes my report.
Thank you so much, Catherine. Are there any questions, please? Hearing no questions? Any old business? Any new business? There being no further discussion, meeting is adjourned. Thank you all very much.
Thank you.
Thank you.
Thank
See you in a
you.
few minutes.
Yeah.
See you in a few minutes.